Good evening. Welcome to the ShadowTrader video weekly for Sunday, January 29th, 2012. The pullback to the dominant trend line in gold, this is a continuous contract of GC futures, never happened. Obviously, I was looking for the buy in this area. We came in between these two trend lines, and on the news earlier this week that the Fed is going to maintain its ZIRP, that being zero interest rate policy, all the way out to the end of 2014, which is almost 2 full years, I guess, from now. Gold rallied very hard and cleared the trend line and made a very big body candle on the weekly, thus completely changing the trend. So thus, any pullbacks from here are buyable. Gold should easily make it to about the 1800 level, I would say, here, which is its next resistance point. The question is where to either buy to initiate position or add to your position. I would be looking for Fibonacci retracements, and also I'm going to be keeping a close eye also on historically just very, very simple price action patterns of how gold trades and what it does when it starts to spike and get vertical. So be aware of that anything that's happening now has happened in the past, and you can really just kind of go back and look at how the price action occurred. Like, for instance, here's a typical example of a price spike, and the pullback here is probably not even possibly a Fibonacci number from the low of that move, right, from where the breakout point occurred. So let's see if we have an example there. Yeah, you can see here, there's 38.2, there's 50, there's a 61.8, so you can see a fib move work there, right? And then when you moved up, right, this is like 100% retracement of this move, and yet when you moved below the prior pullback low, it was a fake out, and that's really important to remember, because anytime that you have something that's in a strong uptrend, your first reference point is always that pullback. So then when price moves to that area and it fails and goes below, lots of people are thinking bearish, but you have to watch the price action closely and see if it's indeed a fake out move, right, as it was this time, or it's real and the instrument you're tracking moves lower. So always use these prior pullback points as references and use your Fibonacci numbers. As you can see, like, it worked well on that one, and I could probably go back to a number of them here and you would see that it worked well as well. Obviously, the longer gold, if gold does not pull back by price at all and just pulls back by time and goes sideways, that will be a much easier entry to put on more contracts, right? If you have it there, or to initiate a position. But either way, just be careful. Try your best not to buy at highs. Try your best to buy on pullbacks. They will come. There will be some sort of a pullback action, and like I said, the depth and breadth and personality of that pullback is going to tell us a lot about where gold is going to go, how it reacts when it comes in. Okay, let's take a quick look at the S&P here. I'm going to keep it on the ES, and I just want to show you something using volume profile here, and I'm going to use the monkey bar study here, which is right here in Thinkorswim, to show you the profile. If you don't have market profile software, you can always use this. Just go to monkey bars and add study, and I'm just going to leave it on, let me see, 30 minutes chart. If I leave the time per profile on the chart, it's going to show me exactly what's on the chart, so I'm going to leave it like that. And but in doing so, I'm going to go to a smaller time frame, such as an hourly, so we can only see going back to the beginning of the year, right? So what I want to point out on this profile, essentially, this is showing you where all the volume traded. I want to show you that the really, really key area here, if you go back to where all the volume is distributed since the beginning of the year, has been, or is right now, the 1308, and that's right where we are. Notice how Friday's action could not break that area at all, with multiple tests. So going forward this week, I want you to watch this area very, very closely. You can see just from the support and resistance on the chart that, on Friday, if you were trading, you can see that market kept trying to push 1308, 1307, couldn't do it, and ended up bouncing and closing relatively strong. But you can also see by looking at the composite profile of the year going back to here, that look at where the fattest part of the distribution is. It's right there at the 1308, and the study here, this monkey bars, even denotes the point of control. It's denoting this 1307.50 as the strongest area. So Watch this very closely. Market has propensity to go higher here. Now, if the market is weak, right, and we start to trade below it, think of all of this as overhead supply. And when you think about where the target for the market would be, where it would fall down to, let's say you're having a destination trade, so to speak, for a short, right? You're pretty sure that at this point the 1308 will break. Maybe it tests a couple times on Monday, bounces. I don't know. Maybe it happens on Tuesday. I'm not predicting that it's going to. I'm just saying how to play it if it does. Your destination would have to be any area in the profile here where less volume traded. So the market would probably move here to the 1295 to 1300, which would make sense, right? Because notice that a break of that 1308 is also going to be a break of a trend line on this hourly, right? So you have trend line break, which will set it off, and then again, where does it go? Destination, it's going to move to a low volume area where price will probably be rejected. It'll go there, and when it goes there, it'll probably bounce from there because price doesn't like it in these areas where there is low volume. All right, so something to think about when you look at the longer term composite profile, so to speak, of everything on the chart there, and try to figure out, where the supply and demand is in the market, where the large amount of contracts traded, where the traders feel very comfortable with price. Right now, price is very balanced at that 1308, but again, if you move below that area under the trend line, then it has to sort of unbalance itself and move to a different area of balance. Okay. On top, staying with the topic of futures trading, I want to point out some really cool videos that I made earlier in the week, and they're right here on the ShadowTrader 01 YouTube channel. So just do a search for ShadowTrader 01, and I want you to see if you can find these two videos. I didn't tweet them or anything. I put them out on the 24th, and it's part 1 here and part 2, and I purposely named them Difficult Day. And if you're interested in futures trading, these are live trading videos similar to some of the other ones I've posted on the channel. But these I feel are really special because they really show you the ins and outs of a day that it was very, very difficult to navigate. And as you see the video, you'll see me kind of, make some money, give it back, dig myself, dig a hole, dig myself out of the hole, and it's just a lot of work. And I feel that it's really important because if you can learn to navigate these types of days, then the other days where there's a little bit more trend, where it's obvious what the bias is, will be a lot easier for you. So if you're interested in futures trading, you can check it out. Again, it's Difficult Day Part 1, Live Trading 124, and also Difficult Day Part 2 right here on our YouTube channel. And again, that channel is ShadowTrader 01. All right? Enjoy. See you guys next weekend. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.